Hi everyone, good evening. So today was paper number 7, direct tax and international taxation. Are we online? Yes, I guess we are. Yeah. Paper 7, direct tax and international taxation. Today was the paper. And so here we are with the analysis of this question paper. I'm not going to solve each and everything, of course, but I'll simply analyze the question paper. Uh, I'll try and discuss uh, how this question paper is identical to the past question papers, how it is a bit different. Chalo, let's get into it. Now, the first and the foremost reaction that I got from various students immediately after the paper was that, sir, it was a very lengthy paper. And certain students also told me that it was a conceptual paper, it was a tough paper. But yes, uh, the one observation that everybody gave was that yes, it was quite lengthy. And the answer is yes, correct, it was definitely lengthy. But the reason why it was lengthy was primarily because, number one, there were many questions asked. True. Your compulsory question number one, hi beta. Your compulsory question number one was a standard question. But after that, question two onwards, each question had minimum three subparts. There was like question number two, which had three parts of the sum. Question three had two parts only. So question three was a short question. Question two, question four, question five, each had three subparts. Question number six had four subparts. So yes, as a student, when you are writing the question paper, you will have to attempt many things, and definitely due to that, the question paper is a lengthy paper. Question one was a standard question. Yes, the twist that was introduced, I'm saying twist because it is generally a question where it specifically says ignore minimum alternate tax, but you have to do your computation as per the regular Finance Act. This time, question number one told you that the company wants to pay tax under section 115 BAB. So that means a student who had studied 115 BAB, who knew what exemptions and what deductions are not permitted, he or she would be able to attempt this question very comfortably. And this thing is put up in the question towards the end. So as a student, if I'm reading the question paper, I find the question very standard. Question number one, very standard question. There are two adjustments relating to TDS disallowance, one adjustment pertaining to cash payment, Rule 6DD, one adjustment relating to depreciation, etc. Capital gains. Now, from May 2019 to July 2021, from May 19 to July 21, except for the May 2020 exam, which did not happen due to COVID. But if you analyze question papers from May 2019 to July 2021, capital gains was absent from your question paper. It was a kind of a disappointment for us as faculties because it's such an important head of income. So many tricky questions can be framed, and we would find on a regular basis that it was absent from the paper. This attempt, the institute have the institute has 8 marks of MCQs exclusively from capital gains, and in the question paper also, capital gains found a place in the descriptive part. Question paper, capital gains did find a place. In this compulsory question, there were three adjustments devoted to capital gain. So any student who relied on the past trend and thought, hey, our capital gain is not coming up in the paper since 2019, so it might not come up in this attempt also, that student was in for a surprise. 8 marks of MCQs exclusively from capital gains, and capital gains was also part of the descriptive questions. Question number 1 had 3 adjustments specifically for capital gains, and very honestly the question was quite standard. Any student who has decently practiced PGBP would have understood, okay, there is one adjustment of chapter 6A deduction, there are adjustments, one is from IFOS, one is from 3 4 adjustments are from PGBP. That is the normal trend of question 1. As you come towards the end, you realize, okay, the company wants to pay tax as per section 115 BAB. That is what is asked. The company wants to pay tax as per section number 115 BAB. So you have to switch your thinking and now start uh, all your computation thoughts, keeping in mind 115 BAB. But very frankly, it was not a too difficult a sum. It was manageable. You could easily attempt your question number 1 of 14 marks, and a student who is aware about 115 BAB can definitely score in this question number 1. Yeah, and it was not a excessively lengthy sum also. Generally question 1 is way too lengthy, but this one wasn't lengthy as compared to the past papers. Comfortably manageable. One or two twists were there, yes, but overall question 1 was easy to tackle. Now question number 2. This question number 2, this was I would say a type of a surprise, because this question was a question on set off and carry forward combined with the concept of amalgamation. So and honestly, this is a exact ditto question that was asked in May 2019 old course. Frankly speaking, even if you had not attempted past papers, but you could have easily handled this sum if you would have studied section number 72A. Then you could have managed this question. Uh, it was actually speaking a bonus question. You could have, you can easily score your 4 marks here. Excessive information is given, but a student who knows the section is aware that it is only the business loss which can be carried forward and set off by the amalgamated company and unabsorbed depreciation. The other losses, unabsorbed expenditure on scientific research, etc., is not permitted under section 72A. The only change that institute made was from May 2019 old course to this exam, they just changed the name of the companies. Bus. Baki, the sum was absolutely simple to tackle. This was actually a bonus question. But you can observe question number 2, part A. Part A itself has subpart number 1 and there is subpart number 2. And very frankly, this was subpart number 2. I would go to the extent of saying this is CA inter-level sum. It is a question on compulsory acquisition. Everything is given to you ready-made. Any student who has even studied once compulsory acquisition, I am not even talking about revision. I'm not even talking about revising this in the 1.5 day. Any student who has just studied compulsory acquisition at CA Inter and probably once at CA Final can easily score these 4 marks. This was actually an unexpected bonus sum. There is initial compensation, there is enhanced compensation, index numbers are given to you, and you just have to write some initial theory at the beginning and do the working. Pretty manageable. Yes, it would be time consuming because you will have to present a different separate solution. So yes, you are attempting more number of questions. Question number 2, in part A itself, you are attempting 2 parts. So it will consume time. That means yes, your paper you will have time constraints. It is a lengthy question paper. But this was something very simple. Question number 2, part B. Well, again, easy sum. Easy because it is a standard sum based on transfer pricing. In fact, this sum is talking about computation of arm's length price, and the examiner has actually made your life quite simple because he has told you the method also that you have to apply. Generally, questions based on transfer pricing, computation of arm's length price give you the information but do not indicate the method. As a student, you have to judge on your own which method will apply and solve the sum. Here, the examiner has made it even simpler, that he is, just give me a second. Hi, Nilesh. No, I'm not on mute. So just that the promotion part has to be done. Okay, I'll do it. Yes. Sorry. So, transactional net margin method, the method itself was given to you, and was quite simple to tackle this sum. Generally, transfer pricing is something that students don't leave out an option. It is one of the main chapters of international taxation. So, this is something where I feel every student would have easily solved. So, standard sum, in fact, more than standard sum, quite simple to tackle. Question number 3, again following a pattern. This is a question based on charitable trust. And charitable trust, you can either get a question based on section number 11, or you can get a question based on section 115 TD. Recent trend observed is that charitable trust as a chapter definitely is part of your question paper. Definitely. It is always part of your paper, and it is either part of your paper in the form of section 11, a full-fledged question will be given. July 2021 exam had section 11 wala sum. December 2021 had section 115 TD sum. The smart thing, the intelligent thing put up in this sum was that this sum required a student to be aware about rule 17 CB, which actually speaking is the trend of institute whenever it has asked the question based on 115 TD. As a student, you must also be aware about the valuation rules that are there in rule 17 CB. This was a very simple sum. Some students might have messed it up because they were either not properly aware about 17 CB, or they did not could not recollect it. But yes, it was not a difficult sum. A student who would read the question calmly, you would be able to solve this question quite easily. Quite easily. This 8 marks could have been in your pocket, could have been in your kitty, if you know section 115 TD and rule 17 CB. Exactly, content was picked up from the rules and a question was created. Question 3, part A. Question 3 actually was, if I can say that way, was the shortest sum in the entire question paper. In the entire question paper, attempting question number 3 would have taken lesser time as compared to the balanced question paper. Question 3 had only part A and part B. Part B, now even this was something interesting. Manageable sum. The question was from the chapter of double taxation avoidance agreement. And yes, we all are aware that the institute always frames a 6-mark question based on double taxation avoidance agreement. This time, the institute tested you on double taxation avoidance agreement, and the amendment of section 115 BAC. The amendment of section 115 BAC is new tax regime that is applicable to individuals and HUF. That was the amendment for July attempt and December attempt. Very intelligently drafted, very straightforward sum. When a student is reading the sum, he or she can quickly analyze. Okay, this is salary, the house property, this is foreign income, this is chapter 6A deduction. And then towards the end, also when you read foreign income, you realize that okay, this must be related to double taxation avoidance agreement. And the question specifically says India does not have a double taxation avoidance agreement with Brazil. That means you are going to claim a relief under section 91. Your relief will be under section 91. On an average basis, you're going to compute your tax liability, calculate the average rate of tax, and do your working of relief. But towards the end, assuming he opts for section 115 BAC, complying with all the necessary rules. So now your thinking again changes. When you were doing salary, you would have thought, let me take a standard deduction. This is gross salary given. Serial number 6 said interest on housing loan was paid for a residential property in which he resides. So this is SOP deduction. Public Provident Fund deduction under 80C. Medical insurance premium deduction under 80D. Students would also have observed that he is a senior citizen aged 62 years. So you would have thought that the basic exemption limit applicable is 3 lakhs. But the moment you see that the question is talking about 115 BAC, basic exemption limit becomes 2,50,000. No standard deduction. SOP deduction will not be permitted. Chapter 6A deductions are also not permitted. So your computation will change. Your total income will change. Your average tax rate will change. Relief calculation will not be that difficult. But a student has to remember that 115 BAC, what the slab rates are, and what are the special things to keep in mind when it comes to computation. These are your 3 foreign incomes: professional income, dividend income, rent from house property situated in country Brazil. Even this adjustment number 4 can be related to a Bombay High Court judgment, which is studied in the chapter of DTAA, that if there are certain deductions that are permitted under Income Tax Act, it is only the balance taxable amount which is subject to double tax. So when you take this 1,80,000 under the head house property, that is only your GAV, rental income. You will take a deduction of municipal taxes, no information is given. You will take a standard deduction of 30%. This type of a computation will not be there in the Brazil's calculation. So in Brazil, it can be assumed you have paid tax on the full 1,80,000, but in India, you are only paying tax on the 70% after taking a standard deduction. So it is only that 70% component which is subject to double tax. And so accordingly, you have to take care of this aspect when you are calculating your relief under section 91. So a very intelligently drafted question. A student had to be aware about small things. You have to mention the case law. You have to ensure that 115 BAC is applied. So all those deductions and exemptions that generally are available will not be allowed. Easy to solve if you are alert while you are solving this. Then comes question number 4. Question number 4, again on expected lines, a question on TDS, and the question was based on the amendment. E-commerce transactions are now subject to TDS under section 194O. Question wasn't difficult. Question was not at all difficult. A student who knew section 194O would be able to easily solve this. TDS, TCS is again something that is regularly part of your paper, always part of your paper, TDS, TCS. So, sorry, TDS, TCS is always part of the paper, and so therefore, a student is always prepared for it. And 194O is a significant amendment. So this again was something where a student could have easily scored. You know the section, you can solve it very easily. You have to write a theory answer basically. Subpart 2. This again was a really intelligent question. This was on tax collected at source, TCS. Now, in this, you were being tested on 206C, that is the section based on TCS, and that section has had amendments. Just give me a second, please. Yeah, TCS has had amendments. Subsection 1H has been created. So the question gave you information about the turnover. It was 9.8 crores from one business and 60 lakhs from the other business. So totaling the two turnovers, your turnover exceeded 10 crores in the preceding financial year. There was sale of motor cars. Now when there is sale of motor car, it is covered by 206C 1F. And 206C 1F, if it is applicable, then 1H will not apply. But for 1F to apply, the sale value of the motor car should be about 10 lakhs. Also, the question tested that knowledge of the student where 1st of October 2020 is the date with effect from which 1H was made applicable. So any transaction happening before 1st October, anyways they were attracted 1H. Any transaction happening after 1st October, 1H would be attracted if 1F did not get attracted. So the first car sold 37 lakhs, 14th of July, 1F will be attracted. Amount is about 10 lakhs. Second car sold, again 1F will be attracted, 12th of August. Third car sold, the sale value is only 8 lakhs. So your 1F is not attracted. Now the question will be that if 1F is not attracted, 1H can get covered. But for 1H to apply, your sale value should exceed 50 lakh rupees. So this is a situation where even 1H is not attracted. 5th of November, 12 lakh rupees. So again, when you say 12 lakh rupees sale of motor car, 1F gets attracted. And so a student had to compare it, a student had to simultaneously think of 1F also and 1H also. Honestly speaking, even this was something that was manageable for a student, somebody who had focused on the amendments and you know the interplay between 1H and 1F, you can easily solve this part. So question number 4, first part A, that was on TDS and TCS, and both those parts were based on amendments introduced by Finance Act 2020. Moving ahead, question 4 part B. Again, this has been the trend of the institute recently, and when I say recently, I mean November 2018 onwards. November 2018 onwards, they have been asking this particular question, this particular provision, chapter 12A of the Income Tax Act. Chapter 12A of the Income Tax Act, which talks of a non-resident individual, NRI, where you have section numbers from 115C to 115I. Now here, the whole sum was very simple. The question simply asked, sorry, calculate the balance amount of tax payable or tax refundable. Okay, so I had to compute my gross tax liability and then find out the amount refund or the amount payable. But the smart thing here was this adjustment, the first one. They said long-term capital gain 8,50,000. They gave you expenditure related to the transfer, which was not considered in the above calculation. So fair enough. So a student would say, okay, that means my long-term capital gain is 8,20,000. Then the question gives you information: investment made in notified savings certificate, investment made in shares of Indian public limited companies. Both these investments will give you an exemption under section 115F. Now, the problem that a student would face in the exam was 115F is an exemption on proportionate basis. Take your long-term capital gain multiplied by cost of the new asset. In this case, those notified savings certificates and investment in shares divided by net consideration. Issue is that I do not have this figure. Net consideration is not given in the sum. I have the long-term capital gain, I have cost of new assets, but I don't have net consideration. The student might start racking his or her brains. Is there anything hidden? And the hidden thing actually is this aspect: the dates on which investments are made are falling after 6 months from the date of transfer. As per 115F, you have to make an investment within 6 months. So 31st May plus 6 months will give you end of November. And the investments are made in December and the investments are made in March. That means 115F exemption is not applicable only here. My long-term capital gain of 8,20,000 that is given is fully subject to tax. So the question has not given me information about net consideration, but I don't require it. This may have resulted into some students wasting their time, where they would have tried to figure out something from that something from the question, trying to find out net consideration. But in such a subtle manner, this information was hidden that the investment is made beyond 6 months. If you could find this in the first instant, then your solution would have gotten over very quickly. But otherwise, you would have tried to find something hidden and then you would have wasted your time. Maybe you would have made an assumption: since this information is not given, exemption cannot be calculated, so the whole amount is made taxable. Logically thinking, that assumption is a wrong assumption because the exemption is not available only. So a student saying that exemption is not available because information is not given will not be able to score marks. A student saying that exemption is not available because the investment is beyond the time limit, yes, you will be able to score your marks. So long-term capital gain will be taxed, that is at the rate of 10%. Interest income taxed at 20%. Short-term capital gain under 111A does not get covered by this chapter of Income Tax Act. Your regular 15% rate applies. You have to compute your tax. The amounts are indicating that surcharge will not apply. So you have to take care that after computing these taxes, you have to add health and education cess of 4%. After adding health and education cess, so your tax will be on those interest incomes at the rate of 20%. Long-term capital gain will be at the rate of 10%. Now you got to add health and education cess of 4%. And after this, reduce the TDS. This is your final solution, which will give you tax payable or tax refundable. Maybe in a hurry, some student might have forgotten the 4% health education cess. Although at CFN level, I don't think a student would make that type of an error. But yes, they could have, the student could have forgotten, uh, the health and education cess. So this sum was having this one smart thing, that 115F you are inclined to think about it, but the exemption is not available. Question 5. Now, honestly, this question 5. This was the tough part of the paper. This was really difficult. It was a pure theory question. Question number 5. You had to, it was a question based on many things involved. So there was a return of income filed, then the return was picked up under 143.1, processing was done, then a rectification order was passed under 154, and then a revision application was made under 264. This question, honestly speaking, needed an in-depth knowledge of section 260. A story was created that was, to be very honest, confusing also. So a student had to patiently read the question, and after reading the question, analyze the sequence of events. And then the question is asking that the commissioner has rejected the revision petition, and is that rejection valid? Now everybody will remember, yeah, by section 264 is talking about the doctrine of total merger. And when you are talking about doctrine of total merger, it means if you have filed an appeal with Commissioner Appeals or with ITAT, then section 264 is no longer applicable. In this question, there is no mention of any appeal file. In this question, the assessing officer has passed a rectification order under section 154. And when you read the opening statement in the Act, section 264, any order passed by assessing officer other than an order to which section 263 applies, which means any order will include rectification order also, not necessarily an assessment order. Any order passed by an assessing officer, but 263 does not apply, then 264 can apply. There is never any appeal made. The assessee has not filed any appeal with Commissioner Appeals or ITAT. So the question of discussing doctrine of total merger does not arise only here. Revision petition can be maintained. The CIT is wrong in this, because what can be revised is the rectification order passed by the assessing officer, and that rectification order definitely can be revised. This meant that a student needed this level of in-depth knowledge, that when you are trying to solve the sum, you will recollect, okay, section 264 talks of this. It is talking of doctrine of total merger, but doctrine of total merger does not play any role here. And so, yes, you needed to know the section the way it has been drafted. This was, frankly speaking, a difficult question under exam pressure. Expecting a student to be able to crack this type of sum, remembering the Bayer Act, remembering the drafting, yes, it is a bit too much to expect from a student, especially somebody who has given 6 papers already, is already dealing with a difficult subject, trying to recollect one section of Income Tax Act. Yes, it would be a bit difficult expecting that from the student. This was an easy part. So the saving grace here was that there was an or mentioned. So if you were unclear about section 264, you could have racked your brains on this. Here it sounded like a question based on PGBP, but you also required some knowledge of TDS under section 194C. Frankly speaking, this was manageable, much manageable as compared to the sum that we just discussed. Tax has not been deducted at source, so your initial thought is that disallowance should happen, but then you would step back and you would think, is tax required to be deducted at source? So yes, tax was required to be deducted at source, because the situation that was being covered or targeted was a situation of subcontractors, and subcontractors are covered under section 194C. So all that you had to do was write a theory answer, where what you would do is you would mention, okay, this section of PGBP, section 40, clause A, subclause 1A, this section of PGBP is talking about expenses getting disallowed, and you had to quote section 194C that yes, subcontractor payments are also covered, and so disallowance will be perfect. Disallowance will happen, manageable. Question number, subpart number 2. This is exactly from your study material. In the chapter of appeals, at the end of your study material, you are having case laws. Many case laws are printed in the study material. The very first case law, Genpact India Private Limited. This question is exactly based on Genpact India Private Limited. Assessee has done buyback based on Delhi High Court's order, has not followed the provisions of section 115 QA, has not been followed. Assessing officer passes a assessment order saying that you should have followed 115 QA. So there is a 143.3 order passed. Now against this 143.3 order, there is a writ petition filed, and the issue revolved around this writ petition, whether is it the correct approach by the company. So the Supreme Court, the case went up to Supreme Court, Genpact India. It's a Supreme Court judgment. And the Supreme Court said that yes, writ petition is wrong. You can file an appeal. Under appeals made to CIT appeals, section number 246A, there is a point which says that if an assessee denies his liability to be taxed under Income Tax Act, then he can file an appeal with Commissioner Appeals. And the Supreme Court said liability to be taxed under Income Tax Act not only includes income tax but also includes such additional tax under section 115 QA. So writ petition was the wrong approach, because in the Income Tax Act there is already a remedy available of filing an appeal with Commissioner Appeals, and so you have to give your answer according to the judgment. Genpact India said that filing a writ was wrong. Part B, again a question based on amendment. In the concept of equalization levy, a new section was introduced, 165A of Finance Act 2016. Equalization levy is imposed by Finance Act 2016. And 165A is the new section that has been introduced, where a non-resident e-commerce operator who does not have a permanent establishment, when he sells goods, when he provides services, then equalization levy of 2% has to be uh, collected on the sale. So, like there is an amendment of 194O in TDS. Just give me a second, please. Just like there is a TDS amendment of 194O, which talks about sorry, just like there is an amendment, section 194O, an e-commerce operator is going to deduct tax when he makes a payment. Here, if an e-commerce operator is a non-resident and is selling goods or providing online advertisement services, then there will be an equalization levy to be collected. Now, for this sum, the intelligent thing created by the examiner was this entire 165A as a section is not applicable if your transaction done during the year for all these is up to 2 crore rupees. Now, 1.20 crores is the transaction of sale of goods. 70 lakh rupees is the transaction of providing services to residents, and 20 lakh rupees is providing services to non-residents. When you total up, it goes above 2 crores. And so, yes, equalization levy will apply. So, again, based on amendment, the weightage was, yes, a handsome weightage of 6 marks. But a student had to know, had to be aware about the amendment. Only then it was possible for you to answer this. Question 6, part A. Now, this is where, this was the last part. Question 6, part A was talking about GAR, General Anti-Avoidance Rule. Again, a question specific to the knowledge of the student. If you knew it, you could solve it, else you could not. It had two adjustments. One of the adjustments was already covered by ATIA. So there is a concept that if specific anti-avoidance rule, SAAR, SAR, if specific anti-avoidance rule applies, then general anti-avoidance rule will not apply. General anti-avoidance rule will not be applicable. Whereas the first adjustment was such that it is nowhere covered under ATIA. So this is where you could have answered that general anti-avoidance rule will apply subject to conditions getting satisfied, that the intention is to take a tax benefit, abuse or misuse the tax benefit provided. This was the sixth and the last question. So technically speaking, this was the extra question. And if a student did not know general anti-avoidance rule, it would have been difficult for you to attempt this 4 marks. But balance question 6 was quite manageable. Part B was talking about provisional attachment. Section 281B. Pure theory question. All that you have to do is just give out the section. And provisional attachment recently is coming up in your papers. So a student definitely has studied provisional attachment while you are studying assessment procedure. You can easily attempt this. Question 6 was the lengthiest question. It had 4 parts. You had to write 4 solutions. Part C, thin capitalization, section 94B. Again, theory question. You had to quote section 94B. You had to first explain what thin capitalization is. 2 types of DTAA. Again, the same thing, theory question. So question 6 was theory. And honestly speaking, if you are aware about the first 5 questions, you could have easily skipped question number 6. Yes, it had things which were easy to attempt, but it was theory. So, and you had to write 4 theory answers. So if you have attempted, like for example, question number 2, question number 2, question number 3, which was the shortest question. If you have attempted compulsory question and then next 3 questions, 2, 3, 4, and 5. So it was kind of very easy to skip out question number 6. Overall, I would say that The paper was lengthy, definitely yes. The paper expected a student to read with patience. There were small hints and small traps set at different places. It was not a extremely difficult paper. In the past 4 5 attempts, there have been question papers which are like way too difficult to tackle. Here you would find one or two difficult adjustments in a full sum. The question paper was on predictable lines. There was one question on charitable trust, predictable. One question on TDS, predictable. Transfer pricing is always part of your question paper, predictable. DTAA 6 marks ka weightage, predictable, yes. So the question paper was not out of the blue. Something that was unpredictable was capital gains getting so much of weightage all of a sudden. Um, you having a question on set off carry forward was a surprise. So PGBP was also on expected lines. It wasn't a random question paper which would demoralize a student. It was a question paper which would put the student under pressure because you have to read everything, you have to manage your time carefully. The general opinion that students have given me about MCQs was that yes, MCQs were tough, but quite frankly, if you have been following the pattern that institute has been following, if you've observed it, MCQs are expected to be tough. As a CA final student, my honest recommendation would be for the upcoming attempts that you focus on the 70 marks with that level of accuracy, that MCQs will help you score the bonus. MCQs are going to be tough. So do not rely on scoring good marks from MCQs. Take them in your stride. Whatever you can solve, great. Whatever you cannot solve, fine. The 70 marks of descriptive should be paid attention to properly. So this was a small analysis from my side. Next paper that you have is indirect tax. Focus on indirect tax preparation as much as you can. Try to study as much as possible. All the very best. It's the last attempt. It's the last paper of your attempt. So as much as I understand, you would be dead, tired, and exhausted. Just don't mess up or just don't let yourself lose for this one paper. Please just ensure that you can do as much as preparation in your GST and customs. So last battle, don't give up. Just ensure you put in your best. It is just that last 1.5 day that you have to put in, then you have some bit of relaxation coming your way. Chalo. So hope this analysis serves you well enough. Thank you very much. Goodbye.